Hey guys, I'm Gautham and CEO of Polkadex. And before I deep dive into I want to present today, I want to give a brief introduction about what Polkadex is about and why are we doing this. So we started in late 2020. Like it's been 2 years. We've been working on a lot of R&D problems, and we want to trying to crack this problem of decentralized order book trading. And we reached a point where we can actually scale this up to sustain the global volume. And now we have a scalable product that we have deployed to the mainnet also. So in fact, before I start, I want to announce that the 4th of July, that is next week, we'll be switching on the decentralized order book on Polkadex, and it will be going live on an open validator set of more than 200 validators. So that's a big feat for us, especially considering this is the first time in the world some team has done this, and it's really exciting for us. Anyway, before I deep dive into that, let me talk about the history behind decentralized trading, because all these trading, on-chain trading and asset management started back in like 2013. Like soon after the Bitcoin was introduced in 2008, a lot of companies like either Delta, IDEX, BitShares, and few others started building on-chain trading. And I think BitShares was one of the first in 2013 to start this on-chain trading concept. And they try to, I mean, the whole idea or the vision that, okay, we have to decentralize trading and make it accessible to the public started way back in 2013. And we know none of these companies exist today, or even if they are there, like it's not active anymore. And there are few reasons why that happened, because the fall of pioneers. The reason is, in 2013, 2015, and all those years, it was limited. The technology was limited because we didn't even have Ethereum at that point. Smart contracts was not there, just Bitcoin and a bunch of others, the folks of Bitcoin. So the major reasons was the technological limitations, and user experience was brutal, and obviously regulations led to the fall of a bunch of these teams. And there was no game theory, like there's no gamification to attract liquidity. So I mean, when we are building markets, liquidity is the king. So if you don't have liquidity, there is no way the traders or the end users are able to use that for their trades. So these four pillars, or these four problems, resulted in the fall of these big giants who started in 2013, who tried to build decentralized on-chain trading. And I mean, if we deep dive into the technological limitations, one of the reasons was high transaction fees. Because market makers place trades in like hundreds of orders per second. And imagine paying like $30, $20, I'm talking about Ethereum in this case, in this context, like transaction fees for like when you're doing 100 trades. So that's like $1,000 per second that you have to pay. And even if it is possible to pay that kind of fees, the blockchain cannot sustain that. So these were one of the major reasons why it was not able to scale, because the on-chain transaction fees and the market making was not economically viable, and all this will result in low liquidity. So this is the time when Ethereum was introduced. Then we have smart contract, and we have barely functional on-chain trading like BitShares and few other companies. And that's when Hayden Adams wanted to introduce the whole constant product formula in 2018. One of the prime reasons why the AMM was required was he had this idea: how can we bring asset pricing without an order book? Because if you know the price of an asset based on market demand on chain, it's just a matter of sending two transactions. There are two traders who want to send some funds. The trader A needs to send asset A to B, and B wants to send B to A. That's it. The question is, how do we figure out the price? At what price should that transaction happen? So, and in the traditional market, namely the NASDAQ and the traditional stock exchanges, we use an order book. Market makers, traders place orders. That will lead to price discovery, and we have a price at which we can trade. But that's not possible. At least back in 2018, that was not possible even with the introduction of Ethereum. So then, here I have introduced this concept of constant product formula that solved that problem. Where using that formula, now we have a way to discover the price. It was a perfect solution, considering the Ethereum ecosystem. It provided all sorts of functionality that was required to build a decentralized exchange. So it was good enough, but think about it. Did it actually solve any problem? Because we still have centralized exchanges lying around capturing most of the value. And a mainstream user still goes to a centralized exchange to buy assets and enter the crypto world. It's not happening directly. Like for example, like my mom and dad who has no background in computer or needs my help switching on a computer, they cannot interact with AMMs like Uniswap or like other on-chain solutions. So we need to build experiences or products that brings the centralized exchange experience, and so that we don't demand the consumers to change their behavior, because it's very hard to change consumer behavior. They're already familiar with centralized exchanges, and because of this gap in technology between the introduction of Bitcoin between the Uniswap and all the other on-chain dexes, there was a gap which was filled by intermediaries, the centralized exchanges. And they took that opportunity and they created centralized products, which looks like the face of crypto now. And we have seen with FTX and all the other hacks that have happened. And at the end of the day, these entities who supposedly provide value to crypto is actually damaging the reputation of crypto, because crypto lost its core fundamentals or core principles because of these intermediaries and the hacks that happened because of these centralized intermediaries. So that's what I want to talk about. Centralized exchanges, are they actually empowering users to enter crypto, or that just an enforced dependency? Because if you think about it, there is no other solution. And that's the reason why every Tom, Dick, and Harry is going to a centralized exchange, because it's convenient, it's more personal to them, and it's easy to use. So the problem here is, how can we eliminate all those user experience and the convenience, the inconvenience of a decentralized exchange, and bring the same properties of a centralized exchange without the custodial nature of it. So that's the goal behind Polkadex. And I mean, the one sad thing to see is, like, whenever a new token project or a new team building some decentralized product, they celebrate listing in centralized exchanges. Can you think about that? I mean, Satoshi, or whoever that is, started Bitcoin. He wanted to solve a real world problem, right? And that's the reason he created Bitcoin. And that's clearly evident from Block Zero, the message encoded in Block Zero. The newspaper cutting, the heading that we have in Block Zero. And right now, after 20 years or so, we are celebrating getting listings in centralized exchanges and centralized platforms. I mean, did we evolve backwards? What is this? So even after the AMMs, Uniswap, and everything was introduced, it solved a part of the problem, but it didn't solve the actual problem. And we still have users in centralized exchanges. I mean, they're not, the end user, the mainstream users are not prioritizing using a Uniswap over a, let's say, I don't want to name it, but another centralized exchange. So what happened here is, there was a gap, and some centralized intermediaries filled that gap by providing centralized custodial solutions, and crypto lost its value. And now we have FTX, all the other exchanges that went poof. So, but when the mainstream looks at it, it looks like, crypto is like a hype train, and people are betting on things, and it doesn't feel like it has some core fundamentals that it actually started with. And there is no how can I say? There's no. I mean, I'm really pissed off because of this, and also frustrated because the state of people still celebrating the centralized exchanges and the way the listing market is right now. So this is what's happening right now, and I cannot blame the centralized exchanges because there were many builders trying to solve this problem, and it's a very hard problem to solve because building an AMM, it's relatively easy and it's straightforward because once you have a formula for asset pricing, deploy on a smart contract, you're done. But building a decentralized order book where each of the validators validate or verify the trades and individually verify each and every trade, and that should happen at like hundreds of thousands of trades per second, and also it should be geographically distributed, and it should be an open validator set. Building such a system is super hard. I mean, we have to play with the limits of physics because we have to get information about a trade from point A to point B within a certain latency. Only then we can provide the similar experience that these centralized exchanges provide. So that's a very big problem, a very hard problem to solve. But what we did is, in late 2020, when we tried to solve this problem, we got to know about Substrate and the Polkadot and what the Polkadot team is doing, and we approached with the Web3 Foundation grants, and we started slowly chipping away at this problem. After like 2.5 years, we now actually have a solution to this because with Polkadex, we now have a decentralized order book which can sustain the global trading volume across a open validator set. We have a validator set of 200 right now. So I think we have a lot of validators here in this conference. But it's an open set. Anyone can join, just like Ethereum. And all the trades are validated by all the validators. And still we are able to provide 1,000 trades per second. And I have few friends in trading board companies, and I got to know that in the last bull run, the average trades per second was 172 trades per second. That's it, 172. And in our testnet and in our internal testing, we were able to sustain 1,000 trades per second in a decentralized node of 200 without any problem. So this is groundbreaking because now we have at least in this particular version, we have the capability to sustain all crypto trading pairs across all exchanges and across all financial instruments in a blockchain. We don't need an intermediary. And that's a feat because that's a world record, in fact. So it looks like, now you can see that it looks like a centralized exchange. We have the order book, we have the tickers, we have a mobile app, it's connected to the blockchain. And when you think about it, in the current architecture, when I explain later, you will see that we have an operator who collects or aggregates the order book and keeps the order book in memory. And then once the trades are calculated, it's sent out to the public. But even though we have an operator, it's censorship resistant. The reason is the operator can be replaced just like shutting down a software. It's like, think of it like the mythical creature Hydra. You cut off one head, two other will come up. It will just, grow up. So it's like that. You cannot censor Polkadex because it's handled by the validators. You can stop the operator, obviously, with regulations, with all the other things, you can stop the operator, but it's an open source code. Someone else can start the software somewhere else, and the trades can go on. And the exchange never shuts down. And this actually brings back the power to the people, power to the community. Because unlike FTX or any other centralized exchange shutting down, once the interface is gone, it's done, your money is gone. But here, everything is with the validators. And they have the full account data of your accounts, of all the users. So you don't even need the operator to be online to get back your funds or to continue operating the exchange. So it is cross-chain with the help of XCM and Polkadot and its infrastructure. And because of its design, it is censorship resistant. And the beauty here is we have a blockchain, like it's a solo chain, right? It's a full blockchain dedicated for trading. And what that means is we can build a lot of structured products and all of structured products and other your use cases on top of this order book and increase the value as an ecosystem as a whole. And obviously, it's built with traders in mind because we have been touched with tier one market makers and trading bot companies and taking their feedback along the way when we designed this. Because we had our first iteration in 2021, August 2021. We were ready to go because we created the technology, we have everything we need, we have an on-chain order book, but it was not usable. It's like an R&D collectible. Nobody will use it. It won't feel like using Binance or KuCoin or something else. So this is the way we iterated, we got feedback from the stakeholders of the system with the traders, and we reiterated on the technology, on the design, and now we have a product that's similar in functionality to a centralized exchange without the custodial nature. So to give a brief about the tech side, I'm a techie, so I want to share how it works. So the trades are aggregated once the order matching is done. That is broadcasted to the network. It is gossiped between all the validators, all the 200 or more validators we have in our network. And once the trades are verified, it is finalized and it is settled on the peer-to-peer layer itself, on the consensus layer. And then once the user withdraws, the account state is now recorded on-chain to the runtime. From there, the user can use XCMP or any other tools they use generally in Polkadot for transferring the assets between other parachains. So it's a very short description of what's happening, but I'm happy to talk about it off-chain because there's only 2 minutes. I cannot talk about it more. But to give a pictorial representation of that, so this is what's happening. We have the operator sending the trades, and it's gossip between all the validators, and everyone gets it, and everyone verifies it, then they settle the trade. So this way, the operator doesn't hold custody of the funds. It lies with the validators, and still we are able to provide, because of that centralized operator, we can provide millisecond latency for the trading bots, the market makers. Like I mentioned earlier, we have an operator, but that doesn't mean it can be censored. Because you cut down that operator, someone else can just start up the software, and then there you go. Polkadex is up and running. So it is censorship resistant. And so where do we go from here? So now we have the tech. We are deploying that next week. What's next? So the next step for us will be like to onboard more and more market makers and trading bot integration, because the way the centralized exchanges are right now is because they have a lot of tier one market makers, a lot of trading bot companies, a lot of tools that the traders use to trade in those avenues integrated. And we need to do the same. Only then we will be able to provide the same level of experience as a centralized exchange user. And obviously, the biggest one, how to remove the operator from this whole diagram. So there is a technology currently in works, in development right now. We expect to do it, release it in 6-7 months, where we don't even need the operator. The whole order book will be decentralized with the validators. And obviously, with the help of Polkadot, we'll be able to bridge to other ecosystems and bring more liquidity. So to summarize, we now, unlike 10 years ago, we now have a technology that is scalable to sustain the global trading volume. And after 10 years, of conceptualizing this on-chain or decentralized trading, we now have a practical solution. Because Uniswap was there, other AMMs are there. They're good. They're good for operational transactions. That is cool. But we are not competing with AMMs. We are competing with Binance, the Nasdaq. Because let me give you a question to think about. Can you imagine in 10 years, do you think Nasdaq trading in an AMM? They need an order book. They have been, they operated in an order book traditional frame. In the traditional markets, they used order book for trading, and it will be like that. And we need to build, or we need to use the technology that we have to bring Nasdaq or other trading avenues on-chain in a decentralized manner. And obviously, as I mentioned earlier, we want the future where the traders or the token projects celebrate listing in DEXs rather than in a centralized exchange. So if we can achieve that, that's the future that I want to live for. So yeah, I think you can scan the QR code to know more about the project and the milestones that we have coming up. And you can scan the QR on this side to connect with me on Twitter, and we can chat about many things related to crypto, blockchain, or Substrate, or Polkadot. Thank you.